Mid-cap see a surge even as frontline stocks see little change today. Utilities as well as energy and consumer durables clock gains even as financials and auto drag.
Hindustan Unilever performs a tad better than expectations with inline volume growth, but the stock slips on likely profit-taking after the recent run-up.
Bajaj Finance sees healthy income growth but margin crimps and credit cost spikes, leading to a dip in the stock as concerns on asset quality rise for the company.
And while the finance secretary suggests withdrawal of indexation along with the tax cut should be positive, some in the industry differ and the impact is expected to be positive for some and negative for the others.
Hello and welcome. You've tuned into Business Lunch. I am Nisha and with me is Hormaz. So Hormaz, it's the day after the budget and market is feeling the pressure of the budget as well. It was an eventful day yesterday and today is no less. So let's take stock of the markets at lunch hour today. And Nifty 50 is down about 140 odd points. It's at 24,336 levels. It's a cut of 0.5%. While we talk about Sensex inching closer to about 600 points, cut at 570 around about right now. A larger, kind of skepticism as well as nervousness is coming because of the sell-off that is seen in the blue chip banking names. And it's Bank Nifty which is leading the charge in terms of dragging the market 1.7% down in trade. Bank Nifty and some of the biggest financials like Bajaj Twins, also because of the asset quality concern in one of those companies, as well as Axis Bank, Kotak Bank, SBI, all of them are the big draggers for Nifty 50. But what's really resilient is the mid-cap universe, 0.6% up. Hormaz.
We just put out a story on our website and saying that the Nifty Bank, from the record high that it made on the 4th of July of 53,357, it's down almost 2,000 points from that, more than 2,000 points actually. And HDFC Bank is one of the top contributors to the downside since the 4th of July, almost 8% down from the levels that it saw on the 4th of July. It's not recovered from that from the record high that it made after the confirmation that the MSCI weightage will increase for HDFC Bank, and it's been on a downtrend since then. The only outperformer though has been Federal Bank, after some positive news flow that came in. But the stock is seeing some bit of pressure in today's session after the earnings came out recently, slightly off the lows of the day, but still trading 1% lower. What's doing very well, though, in the broader markets are some budget-linked stocks, specifically the shrimp-related names, Avanti Feeds, Waterbase, Apex Frozen Foods. All of them, they were up in yesterday's session. They are building on those gains. And as there you can see, Avanti Feeds 14% higher as we speak. And similar gains seen in stocks like Waterbase and even in Apex Frozen Foods as well, anywhere between 17 to 18%. There you can see Apex Frozen Foods 20% higher now. So very strong gains coming in for these shrimp-related companies. And also like to highlight Antony Waste Management. The finance minister made some announcements in relation to expanding the waste management facilities in 100 other cities of the country. And there you can see now 14% higher there. Antony Waste now up 40% in the last 3 sessions. But Finance Minister Nirmala Sitharaman's record-setting 7th consecutive union budget focused on continuity and growth and uses cushion from a higher dividend from the Reserve Bank of India and public sector companies to enhance.
Right. So the incentivize employment generation. So a large part of that really came from that, and the allocation to capex, defense and subsidies remain the same, and also so does the allocation towards PM Kisan and Manrega schemes. So the former RBI Governor Raghuram Rajan, speaking to CNBC, gave his take on the budget and said that although the government pressed all the right buttons with the budget, there was no allocation of resources to key issues. Let's listen in.
They press all the right buttons, they talk the right talk. But when you look at the aggregate sort of allocations to education and skilling, broadly speaking, they haven't budged. You look at the aggregate allocations to agriculture, which is a big issue given what you said earlier about climate change. They haven't budged. So it's a budget which highlights the main issues, but doesn't really devote resources to them. There is nothing in the budget which suggests these are all experiments. We're doing the same old thing we did in the past, which is allocate a bunch of money to a particular program, see if it flies, and then take stock maybe 5-10 years down the line. We don't have the time for that in India. We absolutely must take a handle of these problems. The one question, of course, is, have they promised enough in spending? Is it an ambitious enough budget? Because the key issue that was thrown up in the election is the lack of jobs in India. And certainly there are a whole bunch of initiatives in this budget on job creation, on apprenticeship, on skilling, a whole gamut of initiatives. But the key question is, A, are they funded enough to work? Some of the sums of money devoted to some of these programs are very, very limited. Will they incentivize businesses to hire? So that's question number one. And two, are they of the magnitude that India requires, given the enormous concerns about joblessness?
All right, so that was an opinion on our union budget coming in from Raghuram Rajan. Now, another area, remember, of focus for the union budget this time was the announcement of a cut in the long-term capital gains tax on the sale of property from 20% to 12.5% now. But the bigger talking point has been that real estate investments lose the benefit of indexation, which allowed the property owners to adjust their gains for inflation. Now, the Finance Secretary clarified to CNBC-TV18 that the tax incidence under the capital gains without indexation is lower and will actually benefit a lot of people. Listen in.
88% of the value of capital gains earned in India, according to our study, comes from people whose returned income is more than 15 lakh rupees. And 62% comes from those who are above 1 crore of returned income. So this is not a tax which is falling predominantly on the not at
middle
all.
Class,
This is the class of income which Thomas Piketty and others have been writing about all the time. Now, at some point,
it then begs the question: are you looking at a higher rate? Because that's the worry, that you've done 12.5. This is perhaps an odd rate.
If we were looking at a higher rate, we would have done it.
But maybe you're testing waters with 12.5, and maybe
we don't believe in testing waters.
So is it going to be 12.5 now for the near term? I mean, for the next few years?
There is no intention to revise it from here. I cannot speak for all the future finance ministers and finance secretaries, but I can say as of now, we have no intention of revising this any further.
So 12.5 is...
Of course, no one can predict the future.
No, absolutely.
Somebody else may cut it too. I can't predict that. But what I am saying is we need equity in taxation. We can't say that only equity markets take risks and a person doing an MSME business is not taking risk and he should pay 39%. And because I'm taking stock market risk, I should not even pay 12.5%. There is a case for a lower rate on capital gains tax. It is much, much lower than the marginal rate of tax on other sources of income. And it's creating distortion in the savings markets also.
The Finance Secretary there, and to take the subject forward, Sonal now joins in to explain how these tax changes are impacting the real estate sector. Sonal, the sector has been in the spotlight.
Oh, it has been, but let's try and understand how it would impact buyers, the investors as well, who buy real estate properties from an investment perspective. But just to give you the news first, of course, we've discussed it at length. Tax rates on long-term gains for sale on property, it has been reduced to 12.5% versus 20%. And of course, the big change is there's no indexation benefit which is available now. However, there was a clarification from the Finance Ministry which suggested that till 2001, the indexation benefit is grandfathered. That means if you bought a property before 2001, that is you will be taking the cost of acquisition as the rate on 2001. But if it is after 2001, the actual cost of acquisition will be considered for calculating long-term capital gains tax. Now, there have been a lot of calculations done, right? Of course, it depends from individual to individual. The calculations would vary. But on the whole, there has been a calculation which would mean if the price hike in real estate is more than 10%, then the new section would be beneficial. Otherwise, it is going to be the old taxation that would continue to benefit any investor. CLSA says negative for investments with shorter duration and moderate price growth, unlikely to impact end users who sell their existing house and reinvest in a new house because they get exemption under Section 54G. But If we talk about relatively short-term investments, that would mean where the market price growth is less than 10%. That is where they would not benefit. But if it is more than 10% and for a longer period of time, the new tax regime would be beneficial for all these investors. Ambit says the lower LTCG rate may incentivize short tenure property investments because now people will try to trade in a shorter period of time itself rather than going for longer period where there is no indexation available. Home buyers who are largely investors, they could reconsider their purchasing decisions due to removal of indexation benefits, which could temporarily dampen sales velocity. Now we just heard the government as well saying that it will largely be beneficial, but that is only when the price hike in real estate properties is more than 9 to 11%. But that has really not been the case. In fact, we spoke to Knight Frank early in the morning and they indicated that annual return on property prices have just been to the tune of 7 to 8%, and it is only in last 3 years that we've seen that 9 to 11% hike. But generally real estate returns are not more than 7 to 8%, and that's why the new tax regime would not be so beneficial for the investors.
All right, Sonal, thanks so much for getting us the entire perspective on this new rule in the budget. Let's also hear out what S. Naren of ICICI Prudential AMC had to say on the removal of indexation benefit and also the impact it could have on the property sector. Listen in.
Real estate stocks were down because capital gains tax on real estate was down without indexation. So I think slowly over a period of time, the government is saying do not invest in debt and invest in property, invest in equity, invest in these kind of asset classes.
Now, Knight Frank India's Ghulam Zia also gave his take on the removal of indexation benefits. Now listen in to what he had to say.
Looking at the arguments that the secretary is putting up, and it is all completely revolving around expected gain per annum of about 11% after inflation adjustment, which is actually not possible. Annual growth of property prices are still in the range of 7 to 8%. The whole argument that one is putting up has to be seen over a period of time. Multiple factors go into it, but then at least looking at this argument that the property price have to go up 10% per annum is not something which cuts ice. At least I haven't seen that happening. So net, most of us believe that in the long run, the gain that you will get out of this new policy will be neutral to what it was earlier. But then we'll have to see case-to-case basis, different arguments. But I think I'm not fully convinced that there is no loss due to change of this regime.
All right, so that was about the changes in the property tax, and let's slip into a breather on that note. But up next, remember, short-term taxes on equity trading as well as taxes on futures and options were also raised in the budget. Views from our panel of guests follows on the other side. Stay tuned.
Welcome back, and continuing with our post-budget analysis, the Finance Ministry also proposed hiking short-term capital gains on certain financial assets to 20% and long-term capital gains tax to 12.5% on financial and non-financial assets. Now, additionally, the STT on futures and options is also hiked to 0.02% and 0.1% respectively. Now, we spoke to Deepak Shenoy of Capital Mind and Dheeraj Reddy of HDFC Securities to understand the impact of the same. Listen in.
The problem with speculation is usually the small person who does not have too much money leverages themselves by taking a loan and then leverages themselves in the market as well. But the actual numbers is not so meaningful that people will get deterred by STT or by a larger capital gains tax, because if they were making profits, then they would be worry. But then the problem, as stated, is that the speculation is bad only because a lot of people lose money. Nobody's going to do a buyback anymore. I think that's just very clear. I would, as a promoter, absolutely not do it. The only people who benefit from buybacks now are mutual funds and insurance companies or pension funds and so on, who are not who don't pay tax, right? So if I was the promoter of a company and I had to pay, I had to participate in a buyback, I would have to pay a certain amount of money to buy back my share.
On sale of securities options, you will have impact of almost 50%. And if we include sale and purchase both, because STT is applicable only on the sell side and not on a buy side, the impact will be almost 21%. So 31% impact on the sell side of the transaction, 21% impact on the sale and purchase both leg of the transactions. This is in the case of sale of options in securities. If we talk about the futures, I think the impact is slightly higher. Impact is 50% on sell side of the transaction. And here the STT is charged on the contract value. And in case of options, it is charged on the premium. If we include sale and purchase both transactions, the impact will be 39%.
All right, so those were the impacts of the big budget announcements. Let's slip into a short breather at this point on Business Lunch, but we'll get you more news and updates on the other side. Don't go anywhere. You're back on CNBC-TV18 with Business Lunch, and a quick look at the market. Well, at this particular point, status quo on Nifty 50, over 0.5% down over there. But Bank Nifty is the one which has seen some bit of improvement in the last 10 minutes of trade. So 1.2% down at this particular moment. And in the last 15 minutes of trade, we have seen some bit of buying in the blue chip banks like State Bank of India, ICICI Bank, Kotak Mahindra Bank, IndusInd Bank, as well as Axis Bank. So the recovery of banks is very critical for the overall recovery. Keep an eye out on that. Now to more budget headlines for the day, and RBI's fit and proper checks for the suitors of IDBI Bank is still underway, says DIPAM Secretary Tuhin Kanta Pandey. Now he adds that the hopes to take the IDBI privatization transaction forward this year is very much there. Listen in.
Quick question on IDBI Bank, because that, of course, has been waiting for several years now. We are given to understand that the RBI has come back now with the clearance on fit and proper. Is the next stage set as far as IDBI Bank is concerned?
I think RBI is in an advanced stage of doing it, and I think we will move forward.
They have not actually come back.
They have not come back. Okay, so it's still...
I mean, they are almost there, but then they would let us know, and we will move to due diligence stage and move forward.
So can we expect that to be done in this financial year?
Hope so.
Hope so, the word from the DIPAM Secretary. Then back to the earnings. United Spirits climbs after delivering a strong set of numbers. Mangalam is here to tell us more. And Mangalam, tell us what worked for the company this time.
Well, you know, the most important thing this time around was a strong operational performance that came by on the back of a couple of things. One, premiumization did well. Realizations of the company improved, especially in the prestige and above segment. And thirdly, there was their own cost control measures as well, which led to both gross margin and EBITDA margin expansion. So overall, even as the revenues were largely in line with street expectations at around 2350 odd crores, the EBITDA was a strong beat at 458 crores. The street was working with a number of around 400 crores, and that took the margins to close to around 19.5%. The net profit at around 300 crores at a time when the street was working with a number of 230 crores. So let's look at the internals out here. The volumes in the prestige and above segment grew by about 5.1%. The street was bracing itself for a number of 4 to 5%. And because of higher realizations, the revenues actually increased by 10.1%. And that reflected in the operational performance as well. And by design, the company is lowering its business coming in from the popular brands, and as a result of which, you know, there was expected decline in both volumes and value out there. The fact was that it wasn't much more than what the street was anticipating, so that was largely expected. More importantly, you know, going forward, let's see how business pans out, because they've made a couple of interesting announcements as well. Acquired 15% stake in V9 Beverages, a company that makes a non-alcoholic distilled brand called Sober, for about 2 crore rupees is what they've invested here. And the other company that they bought is Coffeen, about 25% investment out there for a company that makes specialty cold brew coffee liqueur. So over the last couple of years, they've been making these small, acquisitions or investments in these artisanal brands. So that's one part of the business which we'll keep an eye out on the conference call today at 4 p.m.
All right, Mangalam, thanks so much for giving details on United Spirits in high spirits right now. All right, moving on to some tragic news really coming in from Nepal. A Shaurya airline aircraft crashed during takeoff at Nepal's Tribhuvan International Airport in Kathmandu, and 19 passengers were on board the flight to Pokhara, and also 18 have been dead in this accident. According to officials at the airport, the pilot has sustained serious injuries and has been taken to Kathmandu Medical College for treatment. Now, rescue operations are currently underway at the scene of this accident, and authorities have successfully extinguished the fire that erupted from the aircraft. So quite an unfortunate incident there.
An unfortunate incident indeed. But with that, it's a wrap on this edition of Business Lunch. Midcap Radar takes the action forward.